Hello and welcome to another weekly market commentary today from StashAway. I'm again joined by my co-host here, our Chief Investment Officer, Freddy Lim.
Hi there.
Today we'll bring you another update on current world events, kind of market updates, as well as some pointers for financial planning as well. Before I get started, I wanted to remind everyone of our new upcoming StashAway Academy seminars next week. On July 17th, we have two events, one in Singapore as well as one in Malaysia, in Kuala Lumpur. We have in Singapore how to plan, what's your financial plan B, which talks a little bit about, what happens to the things you don't have control over, right? If you have like an accident, writing your will, things like that. That's at 7 p.m. and you can sign up for this as always on stashaway.sg/events. In Kuala Lumpur, in Malaysia, we will be talking about how to plan for your retirement. So we're gonna talk about different strategies you can use there. That will be held as well at 7 p.m. And you can find out more for that on stashaway.my/events, on our Facebook page as well, Eventbrite also. And with that being said, any questions, concerns you might have throughout the video, please feel free to drop them down in the comment section when you're listening to this, and we'll be sure to pick those up over the next week or so. So Freddy, let's start with a quick update on the trade war, the ongoing odyssey over the last 8 months, 9 months, yeah. Just give us a quick update, what's going on.
Well, we have a trade truce, right? But I think the bigger picture is important. The trade war has been hyped to be damaging to world economy. It's been overrated as well. Why do I say that? We realize by now the trade war is like a whack-a-mole game. You whack the trade mole with tariffs, 3 other moles pops up. You have Vietnam, your Chinese yuan depreciation, you have other central banks cutting interest rate more aggressively than the US. So what do I mean? With Vietnam, right, in May alone, we saw a surge in Chinese export to Vietnam, PCs and electronic components, 82% increased year on year.
Yeah.
And the same month, we saw a 72% year on year from Vietnam exports to the US. The very same products that we are seeing tariffs being slapped on. So this is like a whack-a-mole, where you control some button over here, something else, some other problems pops up to circumvent it, right? So then also you have, I think going into the G20 back in June in Japan, we have this escalated tension between US and China. The whole time the Chinese yuan depreciated 4.1%. That also provided some offsets for the tariffs, right? So there's just a lot of stuff going on. And in the case of central banks, I think Mr. Trump probably wished that Mr. Mario Draghi is working for the Americans than at the European Central Bank, because so far the Fed has promised to be ready to support the markets when needed, but so far has done nothing. Whereas on the other side, the central banks on the other side have all cut rates already, right? We have Australia, we have Malaysia, we even have the ECB being more aggressive, right? So it's just like, of course it's frustrated. So this trade war really has no teeth.
Yeah, no, I agree. And I think especially when you were saying with the whack-a-mole as a good example, right? People love to find solutions, right? So there will be always people searching for the next solution to the problem, right? The problem is tariffs. Okay, so how do we get around it? Vietnam, one great option for companies to use, right? And it will always be, it's a chase game, right? It's with everything in life, it's always the same kind of thing, right? So I think that really sums up that really nicely, Freddy. Next thing, a little bit more local, and I think this is about, the first half of the year. This is something we talked about last week, right? Equities have appreciated quite well, gold even, right? A lot of asset classes are actually doing quite well, even bonds, not too bad, right?
Yeah.
But for a Singapore specific thing, a lot of people like REITs here, right? People invest a lot in REITs. They're marketed quite heavily as well. They surged about 18-19% already this year, and a lot of people think they're too expensive. What to do? Should we sell them all now? Kind of. Maybe you want to give a little bit more context of what's going on there right now and what the thought is?
From the top-down picture, the REITs has to really outperform because it is interest rate sensitive, and not just the US, but global central banks are now very vocal about being ready to support their economies when necessary. That's exactly what a rate-sensitive asset class that needed to outperform, right? So you can think of REITs as if a particular REIT project has, say, rental incomes, and these incomes are largely been fixed of late, and the next 2 years they are effectively like bonds. And now you have lower interest rates in the market because of the central banks.
Yeah.
That's particularly positive in terms of the present value increase for REITs. So it's really about central bank cycle, and that's unlikely to change anytime soon. So while REITs are outperform a lot, and I do think that people should be cautious in suffering from the FOMO, the fear of missing out and chasing the high, people should always sort of take a step back and think about their whole portfolio. Yeah. REITs is one part of it. You allocate to it, right? You stick to your plan. You shouldn't change your long-term investment plans, right? I contributed $500 last month. I'm going to do the same thing this month, but then my portfolio should be geographically diversified. Yeah. I should also have more asset types. It's not just one asset classes. So those things should remain the same, regardless of whether REIT is going up a lot or who knows what it's going to do tomorrow. Exactly. Right? We need to always prepare ourselves for uncertainty or surprises. So always go a multi-asset, diversified approach, the way that StashAway really believes in.
Yeah, and I think so. The diversification point is one big thing, right? But the other thing that is going on right now is with having a very strong first half of the year, a lot of like newspaper, lock in your gains and things like that, right? And we always, I think the listeners that listen every week, right, they kind of hear us talk about it quite a bit on, just keep going because your goal is not reached yet probably at that point. But what do you say to the people that, like, they are still investing now, right? They've seen huge upswings, right? It can always go the other way for a certain period of time, right? Especially if all the asset classes are going up, right? At some point something goes up, needs to come down a little bit. It probably doesn't go down very far, but what's kind of your point of view on that in terms of what should they do? Like, should they be worried about it at all? With the market being high, so to speak.
We always have this sort of active management angle, and then in a lot of cases people exit the markets, and then market went further up. What do? You don't know how to get back in anymore. You lost that return, and now you're paying a higher price for it. The key is that it really depends on what kind of plans you have. If you're lump sum investors, you probably would be a bit more subjected to the timing. Yeah. But if you are someone with an investment plan, it's just simply investing your savings, right? You spend less, you save, and you invest those savings regularly every month. You shouldn't care, because your job is to be invested in the economic cycle and let time compounds for you, right? So, and you're not exposed 100% because not entire of your net worth is invested in one go. So we always recommended the approach of splitting your savings and regularly average into the markets. If you have lump sum investors, you naturally be a bit more exposed, but the more key is for you to review a risk level, right? If you have a more balanced risk level, a diversified portfolio, you shouldn't worry about it. If you have a very high risk portfolio that's concentrated on growth, then your lump sum is more at risk. So you should review that. This is a great time to ask those questions of yourself. It's really a function of the risk setting. Why are you reacting to these short-term noises? Something is going on in you, and it's best to understand where they come from.
Yeah, I think especially with a run-up like this, right? Like, for example, this year is a good year, right? It's like, it's not an extraordinary year for bull markets, right? Because the average, right? But I think it's a good point at the halfway mark to also think, maybe I was a little over, my risk level was too high maybe, right? Am I still comfortable with this? And I think this is a discussion that you have to have with yourself all the time.
Yes.
What am I feeling comfortable at night as well? Not just in terms of reaching my goal, what I need, but also not destroying my financial plan.
If
right?
I'm worried about the market being high and exiting it, that means maybe my risk is set.
From the beginning was too high.
It's too high in the beginning.
Yeah.
And because maybe I can get more income generating assets from bonds and maybe other types of assets, other geographies, and I reduce my risk, right? Maybe that's the right answer,
Yeah.
right? Than to exit the market completely and be caught wrong in market timing.
Yes.
As we all know, market timing is a very costly exercise when you
Yeah.
get it wrong.
Yeah.
Think about it. We have last year, fourth quarter, the worst fourth quarter since 2009.
Yeah, 2009, 2010.
And then only to see the best first quarter in 2019 since 2010 or something.
Yeah.
And then May is the same. May was a bad month, and it was the second worst May ever since 1962.
Yeah.
And only to see June being a great month, right?
Exactly.
It's nearly impossible to just go and time the market perfectly. You must be a market god or something, right? But
Yes.
most of us aren't. So we should just stick to the right
Yeah.
investment plan.
Yeah. No, thanks, Freddy, for this. I think that I think it's a really good conversation to have, and you have it with yourself as well, right? About your risk level. So again, thank you, everyone. Thanks, Freddy, for being here again. We will be with you again next week. So see you then, and hope you enjoyed the video. Again, questions, concerns, either here in the comment box or send us an email at support@stashaway.com. Have a wonderful day. Bye-bye.
Ciao.